Klarna's latest earnings report sent shockwaves through the market. The Swedish fintech giant, once valued at $45.6 billion, posted a significant net loss. Investors panicked, sending the stock into a steep decline. Headlines screamed that Klarna's buy now, pay later model was collapsing under rising interest rates and credit losses. But is this the whole story? The market often reacts to headlines, not the details. Klarna's leadership insists the market is missing the company's underlying strengths and strategic progress. Is this a classic case of Wall Street overreacting to short-term pain, ignoring long-term potential? The real question: is Klarna a wounded giant or a misunderstood innovator? The answer lies in the operational details, not the headline loss. To understand Klarna's future, we need to look beyond the panic. Let's dig deeper. Klarna's CEO, Sebastian Samietkowski, argues the loss is a strategic investment in growth, not a sign of weakness. Klarna is pouring resources into expanding in the US, building a global financial ecosystem, not just a BNPL service. These upfront investments weigh on short-term profits, but drive long-term value. Gross merchandise volume keeps rising, with more users and merchants joining Klarna's platform. Klarna is evolving into a comprehensive shopping and banking app, not just a lender. Samietkowski points to rising revenues and improving credit loss ratios in mature markets as proof the model works. The company's story is less about quarterly losses, more about user growth and product adoption. With over 150 million active consumers and 500,000 merchant partners, Klarna is embedding itself in global e-commerce. Like Amazon in its early days, Klarna is sacrificing today's profits for tomorrow's dominance. Investors are asked to look at the bigger picture, scale, innovation, and future profitability. The real question is whether you believe in Klarna's long-term vision. These are not the metrics of a failing company, they're the signs of a business on the rise. The debate is about patience and perspective. Klarna's secret weapon: the structure of its loan book. Unlike banks with long-term loans, Klarna's Pay in 4 is repaid in just 6 weeks. This rapid turnover lets Klarna adapt to economic changes almost instantly. If risk rises, Klarna tightens lending criteria in real time. Banks can't. Klarna's data-driven approach means it knows customers' habits, not just their credit scores. This allows for smarter, more nuanced lending decisions. While banks are slow to react, Klarna is agile, like a speedboat among container ships. Its operational flexibility keeps credit losses manageable. This dynamic model is what sets Klarna apart from traditional lenders. In a volatile world, agility is everything. That's Klarna's edge. Klarna's physical card is a game-changer, especially in the US. Millions have signed up, using Klarna for both online and in-store purchases. The card appeals to millennials and Gen Z, wary of traditional credit cards and long-term debt. Klarna offers transparency and control, interest-free, structured payments. The card is deeply integrated with Klarna's app, creating a seamless shopping and payment experience. This ecosystem builds loyalty and encourages users to make Klarna their go-to payment method. Klarna isn't just a payment option, it's becoming a daily financial utility. Competing with Visa and MasterCard, Klarna is capturing a share of the physical point-of-sale market. This move transforms Klarna from an occasional service to an everyday essential. It's a bold step toward market dominance. Klarna's US success is key to its global ambitions. Klarna's vision is global, not just European or American. The company is expanding into new countries, adapting to local markets, and building a worldwide network. This scale creates powerful network effects. More merchants attract more shoppers, and vice versa. At the heart of this expansion is Klarna's deep investment in artificial intelligence. AI powers everything from credit decisions to personalized shopping feeds and 24/7 customer service. Generative AI is driving new marketing, product descriptions, and even software development. Klarna's tech-first approach keeps it lean, agile, and ahead of legacy banks. Banks struggle with old IT systems. Klarna was built for the digital age. Its ability to innovate quickly is a major competitive advantage. As AI becomes central to finance, Klarna's early investments could be its biggest strength. The company isn't just a fintech, it's a technology leader. That's a tough act for banks to follow. Klarna's valuation has swung wildly, from $45.6 billion at its peak to just $6.7 billion after the tech crash. Is the company overvalued, or is the market missing something? Comparing Klarna to banks is misleading. It's a high-growth tech platform, not a traditional lender. Its user base rivals tech giants, but its market cap is a fraction of theirs. If Klarna can monetize its 150 million users and reach profitability, today's price could look like a bargain. The real question: do you see Klarna as a risky lender or a disruptive tech leader? The 85% drop may be an overcorrection, not a fair value reset. For long-term investors, this could be an opportunity. Klarna's future depends on execution, not just market sentiment. The company's story is still being written. Sometimes the best bargains are found in the wreckage of market panic. Is Klarna one of them? Klarna's path isn't risk-free. Regulation is tightening, with governments scrutinizing BNPL products and consumer debt. New rules could raise costs and slow growth. Competition is fierce. Apple, PayPal, and banks are all in the game. Klarna must keep innovating to stay ahead. Credit risk is the biggest test. A recession could spike defaults, straining finances. Klarna's AI-driven risk management hasn't faced a true global downturn yet. These risks, regulation, competition, credit, create real uncertainty. Investors must weigh these challenges against Klarna's strengths. Success isn't guaranteed. Execution is everything. High reward comes with high risk. Klarna's future will be shaped by how it navigates these obstacles. So, is Klarna a bargain or a warning sign? Skeptics see a money-losing company in a tough environment, threatened by competition and regulation. Believers see a misunderstood tech leader with a massive user base and innovative edge. Klarna's US push and card strategy could be the next phase of a long-term win or a costly gamble. The truth, both sides have a case. Klarna must prove its investments will lead to sustainable profits. If it succeeds, today's valuation will look absurdly low. The upside is huge, but so is the risk. Investing in Klarna is a bet on vision, execution, and resilience. Its nimble lending, AI, and brand could be more powerful than the market realizes. For risk-averse investors, it's a pass. For those who believe in disruption, it might be a rare opportunity. The final verdict? Still to come.